So this is the second clip about the income statement. And it is obviously the continuation of the first slide. We are talking about gross profit now, starting from gross profit. In the first clip, we were talking about sales minus cost of goods sold, and we arrived at the gross profit. Now we are moving forward and we are continuing, from that point. So gross profit is the starting point here. In this particular part of the income statement is called a profit and loss account. The first part, where, till the gross profit is called trading account, and from gross profit till, we arrive at the net profit, that particular part is called the profit and loss account. Okay, now when we are talking about, this particular profit and loss account, we are now discussing all the indirect incomes and all the indirect expenses. So the direct expenses, as I told you, are the expenses which are regular incomes, which is the money derived from sale of goods and services. And obviously, when we are talking about the other incomes, they are all other regular receipts excluding sales. They may be regular, they may be irregular, but all the incomes which are being derived from the business apart from the regular sale of goods and services, they are called other incomes. They may be regular in nature, they may be irregular in nature sometimes. So the gross profit is then added to the other incomes. They say birds of a feather flock together. Obviously gross profit is credit in nature and other incomes are credit in nature as well. So both the credits are going to get added. So 3,000 plus 1,000, we have 4,000 available at our disposal, from which all the other expenses are to be subtracted. Now these are indirect expenses or indirect costs which are to be subtracted. Now yes, rent has to be paid and advertising has to be paid as well, and salaries have to be paid, and we are going to incur some kind of bad debts every now and then. That is when some of our debtors or trade receivables or credit customers will not be able to pay us back. They will be converted into bad debts or losses of the business. So that is what obviously there are literally countless number of expenses. So I'm just giving you a taste of these things. More than anything else, we'll be discussing more things in much more detail in the other courses which are going to be coming under the same heading. Maybe this is for basically beginners, and for intermediate, the intermediate course and the expert course and the other things, we in those particular courses we are going to discuss these things in much more detail. Basically, when we are talking about all the expenses, rents, rates, taxes, we have advertising, we have salaries, we have bad debts, we have entertainment expenses, we have expenses like depreciation, which is fall in a value of a non-current asset over a period of time, and we have all the other expenses or losses which are incurred. They are going to be listed under the heading of expenses. So all the expenses which are obviously not there in the top part, that is the trading account. The trading account is more or less stagnant. There are hardly any more items that are going to be discussed in the trading account, but in the expenses part or in the profit and loss account, there are going to be a lot of expenses, and due to shortage of space, I'm obviously not going to be able to write all the expenses here, but then again, all the expenses which are not going to be under the category of direct expenses, they are going to be coming here, and they will be discussed underneath the heading of expenses. So the gist of the whole clip is that in the gross profit we add other incomes, all the other receipts excluding sales, and then we are going to subtract expenses from both the incomes, and at the end of it we are going to arrive at the net profit. So gross profit plus other incomes minus expenses, we get net profit. Now what is net profit? The word net means something which has been arrived at after deducting all the amounts. So net profit is the take-home profit. Net profit is the profit saved after paying off all the expenses of the business. Thank you very much. I'll see you in the next clip.